here today. The purpose of this Rules Advisory Committee is to get together, to collaborate together to develop administrative rules to implement House Bill 2563, which becomes operative on September 1, 2026. My colleague Karen sent out an email Tuesday with some attachments. You should have received 4 documents: an agenda, a committee roster, a copy of the enrolled bill, and a draft of the proposed rules. Quick review of the agenda. Yeah, go ahead and scroll down, Karen. We'll do some quick introductions. Then I'll give you provide you with a brief overview of House Bill 2563 and what it does. We'll review the proposed draft rules, where we hope to get a lot of interaction with the audience today, because that is the primary function of what we're here to accomplish through a set of meetings. Obviously, not going to get it all done today. Then we'll open it up for public comment. If you're not on the RAC team, this is your time to share thoughts. And then lastly, we'll discuss next steps. So let's begin with a roll call and a quick introduction. We've got a large RAC committee this time around, so let's take a few minutes and yes, thanks for the roster, and introduce ourselves. Why don't you just let us know your name, position, and who you represent in this RAC committee. Let's go in the order of the roster, and if you are not on the roster, chime in at the end so we can capture your attendance for the record. I'll begin. My name is Scott Klemke. I am a policy analyst here at the DFR. Jesse, you want to begin?
Yeah, good morning, everyone. I am Jesse O'Brien. I am the manager of the policy section with the division.
Hello, my name is Eric Bredesen. I am the P&C product regulation manager here at DFR.
Teddy, are you on? How about Trisha or Aaron?
Good morning, Trisha Goldsmith, manager of our consumer advocacy unit here at the division, and I'll pass it over to you, Aaron. It looks like
Aaron,
he's
do we
not
have
here
you?
yet, so we'll move over to Cassie.
Okay, let's go to Cassie. No, Cassie. How about Spencer?
Hi, all. This is Simon Howard. I'm sitting in for Spencer Peacock today.
Thank you.
Hi, this is David Dahl. I'm a property casualty actuary with the division.
Thank you, David. Ying, are you on?
Yes. Hi. My name is Ying Liu, and I'm actually in the division.
Okay, why don't we go on down to the external RAC members? Denny, are you on? How about Brandon?
Yes, Brandon Vick, National Association of Mutual Insurance Companies, calling you from the road today.
Thank you for doing that. Kenton, are you on?
I am president and accountant for Kenton Bryan Northwest Insurance Council. Thanks for pulling the RAC meeting together.
Thank you. Sean, I believe you're on.
Yeah, hey Scott, Sean Miller, the American Property Casualty Insurance Association. Thanks for having us.
You bet. How about Angela?
Hi, this is actually Chris Coughlin with Oregon Consumer Justice. Angela's on vacation, so I'm sitting in for her. Thank you.
Thank you, Chris. Joel? How about Michelle?
Good morning, Michelle Druce, Executive Director of the Oregon Consumer League.
Thank you. John C., are you on?
Yes, good morning, Scott. John Powell, representing State Farm and Liberty Mutual. Thank you.
Thanks for being here. TJ.
Good morning, TJ Sullivan. I'm an agent with Hagen Hamilton Insurance, and I'm also on the board for the IIABO, the Independent Insurance Agents and Brokers of Oregon.
Great, thank you. Karen, I believe we did get a absentee from ISIS. Is that correct? Or are you on?
That is correct.
Okay. Let's see. We've got Chris. You've already introduced yourself. Mike, are you on? I believe Jennifer was excused as well. How about Montana?
Hi there, Montana Llewellyn, representing the Northwest Insurance Council, and I no longer represent legislative advocates as noted on the document.
Thank you for the correct information. Do we have any others present? If so, would you please introduce yourself?
Hi, I'm Kimmy Padawan.
Sorry.
That's okay. I'll go real quick. I'm Kimmy Padawan, market analyst on Cassie's compliance team.
Very good. Thank you.
Vaughn Van Slyke with American Family Insurance.
Thanks for being here.
Yeah, thank you.
Carrie Olson with Mutual Venum-Claw.
Thank you. Anyone else out there?
Sarah Angove. I'm on Cassie Susie's compliance team.
Great. Thanks for joining us. Anyone else?
Karen
Okay.
Winkle, and I'm the rules coordinator for the division.
She's the one that keeps everybody in line here. Thank you for organizing all this, Karen. I appreciate it. Excuse me. Let's go ahead and talk a little bit about House Bill 2563, its history, and we'll kind of do an overview of the bill and talk about what it does and where rulemaking is needed to fill in the gaps. Insurance price increase transparency is a fairly large issue. The DFR regularly receives complaints from confused and frustrated customers when they have a premium increase and they cannot get a clear explanation from their carrier. This issue is not unique to Oregon. As such, the NAIC has published guidelines for premium increase transparency requirements, which is a thorough approach to disclosures for premium increases. And the way House Bill 2563 was introduced was modeled after the Washington rulemaking, but the Washington rulemaking closely aligns with the NAIC guidance. And a key portion of the NAIC guidance is a phased approach. In the first phase, insurers are required to respond to written requests for any premium increase at renewal, which is a reactive approach. In the second phase, insurers must automatically provide premium change notices for any premium increases of 10% or more, or upon request by the policyholder for any rate increase. So there's a bit of more work in that second phase approach by creating these proactive notices. And there was some rigorous debate between key stakeholders during the legislative session. So the enrolled bill was modified through negotiations to get to what we have here today, which is 2563 enrolled. This eliminates the phased approach and also eliminates the proactive automated notice increases for the trigger for notices. Instead, it provides written requests that insurers only respond to written requests regardless of the increase amount. House Bill 2563 also requires insurers to disclose all but not more than 4 factors that are the most significant related to the premium increase. Other bills, other aspects of the bill remain the same, such as the scope, which applies to personal lines, auto, home, dwelling fire policies. And with that, let's go ahead, take a look at the bill. Karen's got it on her screen up here, just quickly going over excuse me. Section 2. Again, this applies to qualified policies, which means personal lines homeowners, auto, and dwelling fire policies. An insured that renews an existing qualified policy shall, at the insured's written request, give a clear and reasonable written explanation for any increase in the premium the insured must pay. Other key points are a clear and reasonable explanation must be in language that is not technical and is understandable to the average policyholder. Again, I mentioned that it must include all but not more than 4 of the factors that most significantly contributed to the premium increase. And the key portion here on the middle of subsection 3, the Department of QCBS shall by rule define when a factor significantly contributes to the premium increase. So there's our number 1 attachment point for a rule. Moving on, it goes on to explain specific rating variables that must be included if they apply, but it also is not limited to those things. So we have attributes for motor vehicles, attributes for the insured, attributes related to base rates or relativity changes, attributes related to an insured property, and rate capping. Excuse me. Item 4 presents another key point. In a printed or electronic offer to renew a qualified policy, the insured shall include a prominent and conspicuous statement that tells the insured that they may ask the insurer or the insured's agent in writing for an explanation of the premium increase. So prior to renewal, there is a proactive disclosure that needs to be made in the case that premium increases on a policy. It gives the insurer 20 days after receiving the request to respond to it. Item 6, the director of the DCBS may prescribe by rule the form, format, and contents of the written explanation. So there is another potential rulemaking attachment point here. Section 7 basically explains what the bill does not apply to. It's obviously for renewal policies and not new business. Personal policies that cover toys such as boats, motorcycles, etc., are exempt. Life, disability, health, those policies are exempt. Umbrella policies are exempt. And then section E, or I'm sorry, B of subsection 7. Some other things that are protected are credit-based insurance scoring models, pure placement criteria, eligibility rules, confidential trade secrets, or usage-based insurance component of a rate is also protected. So you don't have to give up your secret sauce on those. Subsection 8 is another attachment point potentially for rulemaking. Has to do with periodic data reporting. One of the key aspects, points that industry has made is that they didn't feel there would be enough consumer uptake of this offer to justify the costs So we would like to study this. So we've got a reporting element here that we'll talk about here shortly in the rulemaking that would potentially need to be done. And then lastly, the clarification on the form and manner in which the written request must be submitted to the insured. So with that, is there any questions concerning the House bill itself, the enrolled version? Okay, seeing none, Karen, why don't we pivot over to the rulemaking draft? Yeah, can you? There you go. Okay, so here's the initial draft of the rules. Rule number 1 is basically stating the purpose of the rule and this statutory authority that we have to do this. I would like to point out that subsection 2 under Rule 1 only pertains to, these rules only pertain to the obligation to provide notices under House Bill 2563 and should not be interpreted to alter, replace, or remove any other requirements specified in the insurance code. So everything this rulemaking does is specifically for the purpose of the premium increase notices and does not override any other portions of the insurance code. Let's move on to definitions. Rule number 2. The House bill itself states that a clear and reasonable explanation of a premium increase must include all, but not more than 4 of the factors that most significantly contributed to the increase. DCBS, by rule, shall define when a factor contributes to a premium increase. Item number 2 is that definition or starting point. A rating factor most significantly contributes to a policy premium increase from one term to the next when it exceeds 2% of the current policy premium and ranks in the highest 4 impacts on a dollar increase basis of all rating factors that changed. This is the result of a lot of discussion here internally on what this definition should look like. And this is one point where I'm very curious to get some audience input on your initial take on that.
So Kenton has his hand raised.
Go ahead, Ken.
Thanks. Okay, so first I need to say that since these have just been distributed the last couple days, we're still getting comments and questions in from members. I'm sure that my fellow trade association folks are, and some of the company people are having the same issue. So there may be more on this, but I would love to start off just by asking a little bit more about your discussions around the 2% and how you arrived at that figure. And then I have a couple other questions, but why don't I just start with that one? Like, how did you arrive at 2%? What was the deciding methodology to get? Not that I necessarily have a problem with it. Just curious how you arrived at it.
Dave, would you like to speak to that?
Yes. We looked at 10%, and a quarter of 10% is 2.5. And it went down to 2 because some will be more and some will be less. So we felt if you used a threshold of 2%, you would be getting somewhere around 10% overall.
Okay, that's helpful. One thing that might be useful, just so people can to figure out what this would look like in practice. And I know companies can probably do this on their own too, but I'm not a math person. They promised me there'd be no numbers in this job, but here we are. Just curious about, like, could you provide like a like run those numbers on what a premium increase notice might look like, much as you've done with the premium notice itself? Could you run like an example for us to see how that plays out? Because I've had a couple questions about exactly. It seems fairly clear to me that this is intended to mean 2% of any individual rating factor. But if you could like run an example of what that would look like, that could be really helpful to help insurers see and understand exactly how this would apply.
Okay, my understanding is it's if a rating factor change resulted in the overall premium increase being more than 2%, not necessarily a 2% change in the factor. Because especially with homeowners, oftentimes you have, several different perils, and one factor may not affect all the perils. So whether or not it's it would be 2% overall, not necessarily 2% for a factor that doesn't go through the whole entire rating plan. So I think.
Well, it does. Okay, so that raises a question, because it says a rating factor most significantly contributes to a policy premium increase from one policy when it exceeds 2% of the current policy premium. That can be read, at least has been read by some of our members, to suggest that it's that factor being 2%, not the overall premium increase being 2%.
Yeah, and that's how I'm reading this too. And I guess when we were discussing this in the legislature, the commissioner often used that 10% as he was trying to come up with examples. And so I'm trying to figure out how the overall 10% and this 2% go together. And so I'm just kind of I'm trying to, and because I heard David say that you were trying to use 10% as a baseline of the overall change in the premium, but that's really not in the rule. And so I just need more information on that.
Okay, well, I think that my understanding is the reason that the statute allows for us to specify the factor threshold, not the overall. So we were just using the overall as a guideline to develop a factor threshold.
But you're using 10% from what I've heard, right?
Yes, as a guideline. Okay. But it says a guideline. This may be.
Yep.
The idea is if it's less than 2%, chances are that's not going to get to the. Chances are you wouldn't get to the 10. Remember, this is also the floor. It's not. So.
So one thing to point.
So one thing you're saying is that the way this is worded, it doesn't necessarily say that the 2% is the current policy premium. So it sounds like it needs to say when the change in the factor results in a policy premium greater than 2% or something like that, rather than the language here. Is that?
Yeah, I think so. I think that's what I was getting at. It's a little unclear. I mean, what you've described doesn't sound exactly like what the language looks like. So there might need to be some clarification in there.
Okay, I mean.
And we're happy to mess with it too. I don't know if I can come up with that in the course of the meeting, but given some time and some additional feedback from insurers, we might be able to suggest something.
If I may, I think one thing, just to clarify this, maybe this is clear for everybody already, but 10% was the threshold that Washington had or has still, and that we had initially proposed in the original version of the legislation for when an automatic notice would need to be sent out, but 10% does not actually get mentioned anywhere in the bill that actually passed. So I think the reference to 10% here is really just we need some kind of benchmark for what would be a significant increase and what might be the kind of increase where a consumer would ask for a notice. And I think we'd be open to starting from somewhere other than 10%, but that was just something that had already been put out there in the conversation. So it seemed like a reasonable starting point. And then, if we're talking about 4 factors all adding up to 10%, then you'd start with around 2.5%, 2%. So that's kind of the reasoning, I believe. But all of this is, of course, subject to discussion. I don't think there's anything inevitable about this particular approach.
Yeah, I suspected this would be the most negotiated rulemaking that we would have of all these. So we are definitely open to input.
Yeah, Scott, that's how I think, determined going into this, that this is the issue that we need to resolve in this. And I guess getting some examples, as Kenton said, would be helpful on, again, what certain percentage increases and then how many factors you actually have to list, because that was a lot of the discussion we had. And so I understand the baseline that you're coming up with using the 10%. But there's a lot of different ways this thing can go based on many different factors. So I'm kind of, yeah, we'll have to do some more work on our end too, just to try to run some of those possibilities with numbers.
May I comment?
Please.
Hello, my name is Joel Latcher from United Policyholders. And I do have this comment on this particular piece. Note that in the legislation, subsection 3 refers to factors, not necessarily rating factors. So there could be one significant consideration could be the inflation factor applied to the construction cost. So I think in the notice, where the premium change notice mentions only rating factor, and I think it would be more clear if it said, your premium is impacted by several factors, including these 4, which were the most impactful in increasing your renewal premium. And then here is an explanation for each of these 4 factors. So that maybe addresses some of the conversation as well.
Thank you, Joel.
And while I'm speaking, I'd like to add, I think it would be nice in the regulation to add an optional clause for insurers to identify discounts that may be available to lower the premium, as well as the opportunity to increase the deductible. I think just as a balance, that's an option because it wasn't in the legislation per se. But I think that would be helpful because in particular, one of the main reasons the premium has increased may not be a rating factor. It may be the inflation factor on the dwelling limit, for example, that increase the premium significantly.
Okay.
Thank you.
Can I ask a question? But based on that comment, there's nothing in the legislation that would prohibit or limit an insurer's ability to add those things like deductible and discounts, right? I mean, just to piggyback off
Yes,
what you said. There's nothing in there that would limit that, correct?
right.
Correct.
I would say in the bill, it refers to factors, not subsection 3 refers to factors, not necessarily rating factors. And so one of those is this. And the bill is silent with respect to allowing the insurer to provide more information. I think that's an important thing to do. Since you're talking about why your premium went up, why not give the insurer the availability to say, here are ways you might be able to reduce it? Maybe you weren't directing that question at me.
Well,
I'm sorry.
I guess, yeah, I would agree with that because we did talk about those factors as reasons for premium increase in the legislation. I mean, we talked about inflation, we talked about the increased costs of just construction materials, those kinds of things. So yeah, I would agree with that.
And yeah, go ahead.
I just mentioned that's why I'm suggesting in the language your premium is impacted by several factors, including these 4. Some may be rating factors. One of the factors may be the increase in the coverage. So again, back to the legislation, it mentions factors, not necessarily just rating factors in the language. So increase in the construction cost would be a factor.
So not to push back, but in a roundabout way it is, because if you're talking about inflation factors impact on a homeowner's policy, that results in a change in coverage A, relativity, which is a rating factor. If you're talking about other types of policies, just generalized inflation, that's usually made up for in the base rate of a rating algorithm, which is also a rating factor. So it may be a little bit more roundabout way, but those are definitely rating factors.
But clearly those could be listed, Scott, right? In those
Sure.
factors. I mean, those examples are reasons that could be listed in the premium increase.
Agreed. Okay. This is good input, good discussion. Anyone else?
Scott, I guess, I don't know if this is the time to bring this up, but in this sort of similar area, one of the questions I've had that's come up both when we're debating the legislation, but then also in the rulemaking is confirming that the language that we all agreed to on all but not more than 4 can mean if there's literally just one, you can put in just one unless there are other factors that meet that criteria of the 2% that contributed to an increase. However, we end up working that language in sub 2 there, but I just want to confirm that it's the department's understanding that if there's literally just one factor that contributed in that way to the increase, that one factor is all you have to list.
That's my understanding, correct? If you don't feel that's addressed adequately in the bill itself, then I think we could add that additional verbiage in rulemaking. Is that the feeling?
Possibly, but I want to take some time to think about that. I mean, I have said in communications with insurers that I work with that is our understanding as well. But if it may be, if there's a way to affirmatively state it either in the rule or maybe in guidance that comes out along with the rule, that might be helpful. But if you're also like if you were thinking about a way to run an example of how sub 2 works and how it would apply, you probably could also say something in that analysis that says, and if there's just one rating factor, this is how that would look. If there's one rating factor that contributed, just to, I guess it'd be more of a reassurance than something that needs to be in the rule.
Okay. Great input.
Yeah, because the bill language states include all, but not more than 4, and all could be 1.
Correct. That is the intent.
That's helpful.
Any other comments? I don't see any hands raised. Of course, I don't see all the audience on my screen either. All right, let's go ahead and move on to Rule 3. This has to do with prescribing by rule the form, format, and contents of the written explanation. Subsection 2 provides a policy that a premium change notice example should include the following contents or something substantially similar. And honestly, I copied this straight out of the Washington example. I don't know if anyone had a chance to review this or have any concerns about it.
I'll go.
Please.
So I have a few comments from members regarding some of the specifics in the language as they saw it being a little excessively prescriptive. But I want to caution insurers that see the language and are concerned about it that there is the provision that you can provide something that's substantially similar. So a couple of the comments that I saw were just around, the way this is stated and how it suggests language about future premiums might be problematic for them. So I think that what I'd like to do instead of wading through every line of this and suggesting changes is provide something in writing that address the questions that have been raised by some of our members and just see if there are ways to soften or reconsider some of that language and or test if you've got different language, would this meet the requirements of the rule? If it's different but substantially similar, how far can they go and that isn't before we're not substantially similar? I guess that's the best way to put it. So
okay,
that's what I've got.
Thanks, Kenton. We'll definitely take a look at this, but if you could send some specific examples of what those concerns are, we can try to work around that as we move forward. Danny, I see your hand is up.
Yes, some of us raise our hand, Kenton. Scott, thank you for the opportunity to provide some thoughts. I actually, like Kenton, received a number of comments from members, not, 4-alarm fire kind of comments, but just, ooh, this reads like it's future. This reads like we're notifying them of something when really we're responding to a request from them. So I think there were some kind of language suggestions, but I've gotten so many that I think what might be helpful is if, for your sake, if I organize them all in one document, kind of a line by line, and I'm happy to coordinate with Kenton so you're not receiving, 2 versions of it, and provide, suggestions on how to word this. I would love to take you up on that if you're amenable to that.
Definitely. And I guess I should have clarified before we started getting into the sausage making. I would like everyone to follow up in writing. Even if you provided comments here verbally, if you could follow up with that in writing to make sure that Karen and I can capture all of the input. I said I was going to talk about this in the next steps at the closing of the meeting, but just so everyone's aware now, yes, I encourage. I'm asking actually for more input on these topics, and if you could get those to me or Karen by the end of day Friday the 22nd, that should give us plenty of time to iron it out internally here before our next RAC meeting.
Okay,
So
Friday the 22nd, we'll do that.
I welcome all that input.
Thank you. And then I did have one member ask me, and I think I know the answer, but you know, my job is to ask their questions. If their premium increase was due to an error for the policy, you know, and that's going to be remediated, I assume it would be okay for the insurer to send a remediation error refund letter, something like that, and not this? I mean, we would just want them to not be required to send something, you know, follow this format if, you know, they've made a mistake and they want to communicate that to their customer. I assume that would be okay, but clarifying just in case.
Yeah, that's a great question. And we'll talk about that internally. Hopefully that doesn't occur too often.
Yeah, agreed.
But yes, remediation would be the first line of response in that case.
Thanks.
Okay, I see a hand raised, but I don't see your Michelle.
Michelle.
Yes, just related to that last question, I guess my concern about not counting errors or sending the notice related to an error is we're also dealing with the data collection piece. So if we really want to understand how many consumers are concerned or upset about premium changes, you know, even if it's an error and it gets fixed, that's great. But I think that would skew the data collection because there's still a consumer concern or complaint that needs to be tracked.
And that could open up another issue altogether. I agree with you on that. Any other input on this particular rule? Okay, Karen, why don't we scroll down to rule number 4? So this is that was actually a good segue. Periodic data reporting. We did have some folks here on the team that handles actual data requests to help formulate some guidelines here. So here's where we landed, and this is a good starting point. So periodic data reporting, subsection 2. This rule applies to insurers that offer qualified policies as defined in section 2 of House Bill 2563. And the combined written premium of the qualifying lines is 1 million or greater for the year being reported, the calendar year being reported. Each insurer meeting the definition of the threshold must report no later than April 30th of each year, the following information grouped by zip code. A, the total number of qualified policies where a premium offer or policy premium offer was made during the calendar year, and is greater than the current term premium. And the total number of the policyholders from Group A that submitted a written request for an explanation. C, any other data that the DCBS determines necessary. So that's kind of a to be determined piece. I don't know that we have any of that yet, but we wanted to make sure we included a feature for that. The desire on our department is to also make it easier for both insurance companies and the division, the reporting piece. As far as getting into the details of how the manner in which this data is reported to the division, will be set forth in the rules on the department website. It's just common language on how we typically insert these into rules. Any questions or concerns about this piece? Danny.
I have a question on A. Sorry, 3A. So the total number of qualified policies where policy renewal, where the renewal term premium is greater than the current term premium. Does that mean literally the whole universe of policies that increased by any amount, or is it that 10% threshold? Is there some, like, you're wanting to know about the policies where there was this, the substantial increase, or are you wanting, like, what if a policy, increased by 1%? Is that supposed to be reported?
This is a good topic to discuss right now. In my opinion, yes, because it does. Any premium increase gives the person the report. I'm sorry. Any increase gives the policyholder the right to request an explanation. So in my mind, if they have the right to request it, it should be for any amount of increase. What are the committee's members' thoughts on that? Basically, we want to kind of get a feel for consumer uptake. The numerator being the people that ask about it, the denominator are the people that could have asked about it. Michelle?
Yeah, I mean, because any consumer can ask about an increase, I think from a reporting standpoint, there's no threshold of what the increase needs to be. I mean, if we're going to gather these statistics, it needs to equate with consumer, right to ask for the reasons for the any increase.
Okay.
Can I comment on?
Please do, Joel.
Okay, thank you. I would say to the same point, in most rate increases, an insurer takes typically less than 1 or 2% result in some population getting a decrease. And, 98 of consumers get an increase. And even the people who get a rate decrease typically receive an inflation factor to their dwelling limit that may offset the rate decrease. So it just seems just to benefit insurers here, in a sense, to track the total number of policies renewed versus, and then the separate tracking of how many requested information, just as not requiring the insurer to track another number of how many received an increase at all. I understand that, why you'd want that ratio, but it does require another input for the insurer that you might save stressing them over something more meaningful. So I don't think there is much difference between the total number of policies renewed and those that received an increase.
Thank you. Brendan?
Hey, thanks, Scott. And I'm just thinking out loud here, but to me, right, we have this threshold, be it 2%, 2.5%, whatever it winds up being for reporting. I mean, to me, that just seems like the data that the state would want to wind up collecting, because if it didn't trigger a response from the insurer, I guess I just don't understand what value the data has besides, understanding there was a modest inflation factor that didn't reach 2%, or, I mean, there's not going to be a reason given for that. So it's kind of a blank field as far as I'm concerned in the report. But yeah, I would just in my head, if there's a response from the insurer, then that makes sense to report. But if there's not a response, I don't know what we're reporting besides there was an inquiry.
Well, remember the key goal of this reporting piece is to get a gauge of the consumer uptake.
Scott,
Yes.
your volume is a little bit low.
And I understand that, Scott, but if the consumer is asking for information that doesn't meet the threshold to be provided, I mean, I just don't see how that information is valuable. I get that someone might have asked, but if they asked about a question that doesn't have to be answered, that's just, I don't know. It's not lining up in my head.
Yeah, one thought actually is, I mean, in general, the purpose of this provision, I think, is to understand the consumer uptake of this new ability to ask for this additional information at renewal. And to, one of the things I think we want to understand is not just how frequently this is taken up, but by whom and in what situations and with what kind of size of increase. And I imagine that this is quite unlikely, but if there are actually a significant number of consumers who are requesting these notices when there isn't a significant factor resulting in at least a 2% increase, I think that would actually be good to know, because we might want to recalibrate the policy in that instance, right?
Yeah, and I'm not sure I'm ready for a debate on this. And working backwards from where we started with the 10%, right, which now is not in the bill. Right, the threshold was, at least in my mind, like, let's get the shocking ones, get the explanations out, and the modest, regular increases just kind of, were treated as they always were. I understand that wasn't the bill that was passed at the end of the day. But I think that's for further discussion, probably.
Yeah, like Kenton, I didn't get into this for my math skills. So I do want to think a little more about the numerator denominator factor here. I think Joel probably makes a good point that if we can save ourselves like if insurers are reporting their total number of policies, that's likely easier for them to comply with rather than having to, separately collect, well, what portion of these have premium increases? But I understand that for your purposes, that might be a more helpful denominator. I'd like to talk to smarter people than me to figure out, what makes sense there. We'll include that in our comment letter on the 22nd, I promise.
Good, please. Thank you. Any other concerns on or questions on the data reporting piece?
I had one other. Does it have to be every year? Is there an openness to maybe making it every other year?
Jesse, I'll ask for your help on this one. My understanding is that industry thinks this whole effort is going to be very costly and have little return. And our goal is to see if that's true or not, which is why we want data reporting. And if it is true that, barely anyone ever takes up the insurer on this request, is it actually needed? I think that's what we need to study. I'm not sure that every other year, every third year will provide a very quick turnaround to make that determination. Jesse, can you philosophize on that a little bit?
Yeah, I mean, I think it's partly what you said, and also, this whole concept had been introduced in the context of the idea of requiring automatic notification, and I think we're thinking that if there was interest in going in that direction in the future, it would be good to have data about the uptake of the requested notices and who was using them and how many people and all of that. But as far as the frequency of the reporting, the bill doesn't specify, it just says periodic. So, I think we're open to feedback on it, but it could be anything from multiple times a year to annually to every other year. I think we'd want to talk with our own people internally to see what we thought would work best on our end, but I think we're open to feedback.
This is Joel again. May I comment?
Go ahead, Joel, and then Kenton, I'll get to you next.
Okay, sorry. One thing I would say is that I agree that every other year or something might make more sense, but I'd also add that insurers have this opportunity to provide this information about why your premium increased in the policy renewal themselves, and thus avoid requiring consumers who want to have more information to contact them. So there are ways that the industry can reduce the amount of paperwork here by simply providing more, information at time of renewal. And I think this is a great piece of legislation, and maybe it will encourage insurers to provide that more readily so they don't have to go through more, responding to consumers. But, every other year would also be, I think, a kindness to the insurers. But I don't think there's a lot of room for a complaint.
Kenton, go ahead.
Thanks. On this topic, I think I agree that it might not be necessary to do a report every year. Maybe a way to approach it would be to have an initial report due April 30th of the year following the initiation of the policy, of the public policy, and then either one additional report a year later or 2 years later, and then maybe not you don't have to put in the rule that there's a report due every year. You could have a report, and then you could have a span of time in a secondary report, and then maybe you don't need more reports after that. So that might be another way to approach it. So we can throw that in our comments as well.
Sure. Yeah, please include those in your written comments. And again, internally, we will bat all this stuff around and see what makes the most sense. John?
Yeah, Scott, I just wanted to comment on the yearly versus every other year, because I think every other year makes sense given what I just heard, that there may be policy reasons or ability to want to try to maybe change the policy. And since DCBS can't introduce bills every year, you introduce bills every other year, in the long sessions. As long as you were to date the report to coincide when you may want to make those policy changes to introduce a bill or to, then you could do it every other year and still, again, accomplish those objectives of if you need to, or if we or together want to make policy changes, but you don't do that. You don't really need it every other year or every year, since you don't even introduce bills every year. Does that make sense?
Yes, we do have a short session in the interim, but I get your point.
Oh, well, I know that, but again, agencies come up, the whole agency introducing bills is in the long session. Yeah, the governor has 3 bills, but that's a little different than the process of the long session where the agencies propose bills. That's only in long sessions.
Correct. Thanks. Do you have another one, Sean?
No, that's it. Thanks. Sorry.
Okay, thanks. Anyone else? Okay, Karen, let's see. Why don't we scroll down to the last rule, rule number 5. Section 2, Part 8 of the bill itself states in part that the department shall adopt rules to clarify the form and manner of the written request that an insurer must respond to. So we put down some rules here. The written request must include the policyholder name, address, policy type, policy number. Must be printed, typewritten, or legibly handwritten. Must clearly state that they are requesting an explanation of why their policy premium is increasing. And it must be submitted by postal mail or email. Any other concerns with what we have here, or any suggestions on adding clarity? Go ahead, Denny.
And I don't know if this is where I don't know if clarity can be obtained here, but what do you have any expectation for how an insurer should handle a request that doesn't meet these parameters? I mean, beyond basic customer service, of course, but we want to. I'm wondering if there's. I don't have ideas for clarity on that front. I can work on that, but I'm just wondering if you guys thought about that.
Yeah, we wanted to provide some reasonableness for the industry. If someone ties a note with a request to a RAC and throws it through the window, that's probably not the best way to ask for an explanation.
We agree.
And another concern that I believe leadership had was the tendency on candidly of sometimes companies opening up a portal, getting you online and having you point and click and getting lost and giving up. That's why we didn't want to kind of give the, submit it in a portal run around approach rather than putting in an email or written letter, postal letter. If that helps as far as background.
Yeah, and one thing I would say is, I'm not sure this is something that we would necessarily be addressing in the rule itself, but I think our hope would be that when consumers are, for instance, calling the company to ask about this kind of information, that companies would let people know that that consumers have the opportunity to request this notice in writing. And there are some requirements that consumers be notified of the option to do this in various places, including in renewal notices. But the law does say that it must be in writing. So I don't think we're expecting that if someone just calls that would result in sending the notice.
Okay.
Any other comments concerning the form and manner of written request? Well, seeing none, that does bring us to the end of the draft rules. So let's talk about next steps. I did mention earlier that if you wouldn't mind, if you could, after this meeting, submit any comments that you made today or any other feedback that you get in the interim, yourself or from the people you represent. I would appreciate you submitting that to us in email to either Karen or myself. And like I said, by the end of day, August 22nd, which is a Friday, that'll give us some adequate time to chew on the input and meet internally to see if we can kind of close some of these gaps. Our next meeting will be held Wednesday, September 17th from 10:30 to 12, the same hours. You will receive a meeting invite and updated draft rules prior to this meeting. One other thing, I think Montana corrected me on the roster list. If we have any information, contact information incorrect on this list, if you could also include that in your written feedback, that'd be great. And we'll get that fixed up for you. Karen.
We do need to provide space for opportunity for public comment before we close.
Thank you. Thank you.
This meeting.
I almost missed that. Let's do that right now. Is there any other folks that are not on the RAC itself, but are interested parties on this call that would like to speak? You can do so at this time. Well, seeing none, I guess that brings this meeting to an end. Again, I appreciate everyone and your time and your input. This is a change that we need to make that's acceptable to everyone, and we look forward to your input. And we'll see you again. Go ahead, Karen.
Sorry. The other thing that I should have mentioned is this recording will be posted up on our website, our rulemaking website. But first, I need to build the RAC on the website. So once that's done, you will see this topic with the meeting dates, the meeting materials, and the recordings, which will give everybody a complete picture of what we did today and the date for the next meeting, date and time. Thanks.
Okay. Anything for the good of the order? If not, again, I greatly appreciate your input, and I wish you the best of the rest of the day. Thank you.
Thank you.